Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 14th, 2024, and we're diving into the latest earnings report from Sow Good, a leader in the freeze-dried candy and treat industry. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sow Good has been making waves in the confectionery market with its innovative freeze-dried products. I'm excited to discuss their third quarter results and what they mean for the company's future.
Revenue and profitability overview. Let's start with the top line. Sow Good reported a net revenue of $3.6 million for the third quarter of 2024, which is a significant decrease from $5 million in the same period last year. John, what factors contributed to this decline?
The decrease in revenue was primarily due to a strategic decision by Sow Good to delay product shipments because of quality concerns during the extreme summer heat. This decision, while impacting short-term sales, was necessary to maintain product integrity. Additionally, increased promotional activities and customer allowances also played a role in the revenue dip.
And how did this affect their profitability?
Gross profit for the quarter was $0.6 million, down from $1.3 million last year, with a gross margin decline from 27% to 16%. The lower profitability is attributed to higher costs of goods sold and a lower production yield, largely due to the new facility's operational costs.
Operational challenges and strategic initiatives. Operational challenges seem to have been a significant theme this quarter. Can you elaborate on how Sow Good is addressing these issues?
Absolutely. The company faced a temporary operational pause due to quality concerns amid extreme heat, which affected product quality. However, they've resumed shipments in October, with their sixth freeze dryer now operational. To prevent future issues, they're implementing temperature-controlled distribution.
What about their strategic initiatives moving forward?
Sow Good is expanding its sales team to tap into over 100,000 U.S. stores that could potentially carry their products. Currently, they're only in about 10% of traditional candy locations, so there's significant room for growth. This expansion is part of their broader strategy to strengthen market presence and drive long-term growth.
Financial health and future outlook. Let's talk about Sow Good's financial health. How are they positioned in terms of cash and expenses?
Sow Good ended the quarter with $6.9 million in cash and cash equivalents, a significant increase from $2.4 million at the end of 2023. However, operating expenses rose to $3.8 million, driven by strategic investments in brand expansion and infrastructure.
And what does this mean for their future outlook?
Despite the current challenges, Sow Good's strategic investments are aimed at supporting long-term growth. Their focus on expanding retail partnerships and enhancing distribution capabilities positions them well for future success. However, they need to manage their expenses carefully to ensure sustainable growth.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. Analysts had forecasted an EPS of 9 to 17 cents, but the actual EPS came in at 33 cents. What are your thoughts on this miss?
The miss on EPS is a reflection of the operational challenges and increased expenses we discussed earlier. The higher-than-expected net loss was primarily due to the lower gross profit and increased operating expenses. It's crucial for Sow Good to address these issues to meet future expectations.
Key takeaways. In summary, Sow Good faced a challenging third quarter with a decline in revenue and profitability. However, their strategic initiatives and cash reserves provide a foundation for future growth. John, any final thoughts on their investment prospects?
While the short-term outlook is challenging, Sow Good's focus on expanding its market presence and improving operational efficiencies could yield positive results in the long run. Investors should keep an eye on how the company manages its expenses and executes its growth strategy.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Sow Good's performance in the comments below.